Yo, it is the Stocks and Bars, the Stock Market Hip Hop Podcast, where we talk about everything financial. And today we are celebrating the expansion of my Empower Empire. Today we're going to have my guy Greg Skeene come on and talk to us about life insurance. I've talked to you about it before, but he is the expert. We're going to throw a whole bunch of questions at him. Let's go.
I got my clique ready to use the money they got from jobs, encouraging, teaching them that it's not so hard. I'm doing this, making investing popular. It's X-tro, you tuning in to Stocks and Bars.
Yo, it is the Stocks and Bars podcast, and check this out. Everybody that hits my show, you know I got to give them an intro. So, ladies and gentlemen, my Empower Empire has started to finally stretch from out of my inner circle of friends to people I'm meeting outside of my friends. So this is a guy that I met on Instagram. Our energies immediately sync because he was talking that money talk, and he was also talking about generational wealth. So we shot some messages back and forth, and we hit the DMs, and all of a sudden we had a relationship. And ladies and gentlemen, I want to let you know that I have an expert in the life insurance field. You heard me talk about it before, but we got somebody else on here who's going to give you better details than I ever could give you. Ladies and gentlemen, let's put our hands together for my man, Greg Skeene. What's going on, my brother?
Blessings, man. Blessings. All is well. Thank you for just having me on the show, man. I'm excited to be here and pour value into your listeners.
Thank you. Thank you for the invite, man. Or accepting the invite, should I say, because we've been chasing each other for a minute. And we got it down now. So first and foremost, congratulations to you for your newborn. And I know what that life is about. So
Yes, sir. Just truly blessed, man. Blessed. And, we're just continuing to pray for health and just a happy baby, man. So super excited. And no, that makes number 3 for us, man. Super excited, though.
You done?
Done, man. Yes, we're done. Live and direct. Your show is going to get it first. Yeah, we're done. Yes, sir. Yes, sir.
I hit that 3 too. I would have did 4, but doing the math on what that 3 to 4 is, that's a new house, a new car. It's real. So,
yep. Absolutely. A lot of people, it's crazy. A lot of people don't think about that when it comes to when most people don't realize to raise a kid from 0 to 18, it's about $250,000 per kid. From 0 to 18, it's about $250,000 per kid, and that creeps up on you when you start approaching 3, but like 4, you're like, oh shoot, that's a million right there. Where did my million go? So,
and you're not even talking about inflation right now. So
no, we're gonna get into that too.
Yeah, let's jump into it. Yes. Like I said, man, my guy, he schooled me on life insurance, and we have kicked this topic around a couple times. So I got him on here so he can help me and you understand more about life insurance. What I know about it is the keystone for generational wealth, because it's the vehicle that's going to hold and maintain that value so you can pass that down to your family, period. Because you can be a millionaire all you want, but if you die and hit estate taxes, it's over, so you can have no chance whatsoever at continuing to pass that on to the people that you love. So we about to get into that. So first question I got for you, break it down for me. How did you get into life insurance?
How did I get into life insurance? Definitely probably the most untraditional way possible. So my background is actually in the tech industry. I spent 14 years in IT. Corporate IT, as an engineer. So I worked with Tesla, I worked with Disney, I've worked with the government, in the IT field. But honestly, I got in the way I transitioned into insurance is because what I realized, regardless of how much money I made, I was making a multiple 6 figures in the tech industry, but regardless of how much money I was making in the industry, I still was never going to see financial freedom. I was still never, because growing up, my mom worked 2 to 3 jobs. The typical person, how many people do you know that are good people that work hard, but they still aren't financially free?
Right.
Good people work hard. They're not financially free. And I was just like, man, I saw my mom do that, work 2 to 3 jobs. And I was like, I got the working hard, but I'm like, we got to work smarter as well.
Exactly.
So I was like, I thought I was doing something. I was like, cool, get into the tech industry, do my thing. And then, but I realized even when I was reaching that pinnacle of $250,000, and you grew up anything like me, my mom worked 3 jobs to support me and my brother. I had no idea. I thought if I made 6 figures, life would be sunshine and roses. The sunshines and roses. So I was like, I can end world hunger. I can do whatever I want at 6 figures. But again, obviously, you more responsibilities. You got a family, things like that. So it just made me realize, I'm climbing the corporate ladder. I'm doing what I need to do, but I'm still not financially free. I still can't go to places I want to go. I still can't drive what I want to drive, even making the kind of money that I was making. So it was like, man, there's got to be a different way. But in that process, I was realizing that, my wife she's a stay-at-home wife. My kids stay at home with my wife, because they're all young. So I realized if something were to happen to me, we talk about generational wealth. I was like, if something were to happen to me, it's not going to be generational wealth that they're going to fall into. They're going to fall into generational poverty.
Right.
So I was like, man, that's the last thing I want to do for my family. So I was like, what is something that I can do today to make sure that generational wealth happens in my last name? So transitioning into that, to how I got into the industry, it's kind of a process, but I was starting to look at life insurance as a vehicle to create that generational wealth.
Right.
But what I realized along that process is even for about 3 years, I'm trying to learn about it, but I didn't. The people that were talking to me about it wasn't from an education standpoint. It was from hey, I want to pitch you, sell you this stuff.
Mm-hmm.
And at that point, I never fully understood it. And we're going to dive in deeper into what I mean by that. But that's how I got into the industry. Someone educated me on financial services. They educated me on how to retire properly, how to protect my legacy, build wealth, all through, insurance products and things of that nature. And I just started giving it back to everybody that would talk to me. Anybody you said hi to me, I'm like spitting this information back to you, because it's not taught in schools. It's not taught in homes. It's not taught at dinner table. It's not taught within your circle of influence. It's not taught anywhere. What most people only know about insurance is, you pass away and that's it.
Right.
The wealthy people have been doing this for decades and centuries before us. So that's how I got into the industry as a pure education for myself. But I realized it could be a tool to help millions of other people.
See, that's how we connected, because that's how I got introduced to it, because I actually got into the wrong side of the deal with an insurance policy. And I learned from that experience. Just to get everybody what it is, I had an insurance guy come to my door because I was with the company already. And they were like, okay, you don't have enough coverage. What can we do for you? Yada, yada. And, he put in documents in front of me and everything. And I wasn't paying attention. I am now. So he hit me with a 4-year term life insurance policy. And I took it because of, it all sounded good when we was at the table, but I didn't know at the time what I was getting into. So once that 4 years was up and it was time for renewal, it hit me. And I was like, oh, that's how it works. So I got caught in the matrix. Yeah. Yep.
Back to square one.
Transition to, my situation. I want to let everybody know that there is a difference between term and life. And I've covered that before, but my brother, you go ahead, kick it. The real quick, simple explanation of whole life versus term life.
Gotcha. So I'm gonna correct you there. So it's term and permanent.
Term and permanent.
Term and permanent.
That's why you're here.
Term and permanent. So I want to normalize this language, because a lot of people assume when we talk about, a permanent type of policy, whole life is the only option.
Yeah.
So, and I'm gonna break it down. So the very simple, like you were saying is, term policy is super simple, guys. It's a temporary policy. Just like you said, yours was 4 years. They either 10, 20, 30 years. 10, 20, 30 years, the upside to them is that they're affordable. So today, if we talk about, hey, how can I go guarantee generational wealth for my family? This is the easiest way, the most affordable way, the quickest way to create generational wealth for your family. Because now you're able to say, hey, based on my budget situation, I could go get $250,000, $500,000, $2 million in a term policy. And then at least I know my family is straight for the next 30 years.
Right.
Okay. So affordable, again, the downside to these accounts, downside to these types of policies is they do expire. It's 10, 20, 30 years. I'm very straight and transparent with my clients, 10, 20, 30 years, but at least now you know you're protected up to those 30 years if anything were to happen to you. And I think we all agree with going on with COVID, we all need to make sure we got something right now.
Yeah.
Right. So term policies, they're temporary. Again, they don't have a cash value, so you can't accumulate money, borrow money from it, anything. It works just like your car insurance. You pay into your car insurance every month. If you never get into an accident, the car insurance company keeps all of your money. It's the same thing. Right. We insure our cars, we insure our houses, we insure our jewelry, we insure our clothes, we insure our athletes, insure their body parts. But we don't insure the life that uses any of those things. It's the most mind-blowing thing that we do as a community, as a people. Right. As a people. Like this thing, you get your phone and this iPhone thing, and it's like, hey, you want Apple Care. Apple Care is insurance. Apple Care is insurance, but we're just like, oh, I need to go protect my $1,300 phone. But how much value does your life have? If you say it's unlimited, it doesn't have a value, then why don't you have anything protecting it? So
right. That's how I broke it down before, how they require you to have homeowners insurance. They require you to have auto insurance. Why is it not a requirement to have life insurance? And I think it's based upon assets because other companies own that. So they need that insured in order to protect themselves from something happening. So you should take the same mentality towards your own life.
Yeah. Another way of thinking about it is, we hear about it. I don't know if you followed much of what was going on with Black Lives Matter, stuff like that. There was a comment during that era, when everybody was talking about it. They said, if each person had $1 million policy, the craziness that happens in this world with, minorities and Black and brown people would minimize.
Gone.
But they never explained how can somebody go and get $250,000, $500,000, or $1 million on themselves. A term policy is the easiest way.
Man, I kicked that very same topic. I said police brutality, all of that stuff will be gone if we would simply insure it. Because the minute insurance companies got to start paying out money, they're going to say, y'all better kill that because I can't keep paying this out.
The one last thing I want to cover, let me cover one last thing on term because it's important. When it comes to like reasons people do it. So obviously we talk about creating generational wealth. That's the easiest and the most common way to pass generational wealth. The second thing is when it comes to mortgages, like you hear people talking about, oh, I want to make sure my home is protected and stuff like that. Protecting your house, like the home you live in, if any case you get sick or anything like that, it's a way of being able to make sure your mortgage is paid for. And now you don't have to worry about it. So term policies are very diverse. I tell people it's not a coincidence that insurance policies, these term policies go up to 30 years and mortgages also go up to 30 years.
Right.
It's not a coincidence. So now if something happened to you in 30 years, your house is paid for. Now you have a generational house. Now your family can live in that house forever and not have to worry about moving all over the place.
So I want to go back to a topic that you talked about with building cash value. All right. So term does not. Permanent. I got it right. Permanent does. So a lot of people don't understand that life insurance is also for the living. We make the misinterpretation about life insurance only being accessible to people once someone passes away. You can actually use that life insurance policy in order to help you gain that generational wealth. So go ahead and break that down for them, how you can do that.
So definitely. So we talked about term being a temporary. So when we talk about permanent policies, these are policies that last you your whole life or, up to the age of like 121, basically your whole life. Okay. So There's a couple of different aspects to permanent policies because, like you just said, is when I'm gonna back us up for a second. I'm gonna tell you how we got here, and then how people should start thinking about it. Like, so when you have a kid and you're like, hey, I want to save money for them. You either save it in a savings account, you save it into like a 529 for their college, right, or you save it into like a Gerber life policy. And you're like, okay, cool. This is how my kid's going to go to school, education, whatever, stuff like that. But what wealthy people don't tell you is that they leverage insurance to do the exact same thing. So when we talk about this cash value stuff, I'm going to break it down to you, and I'm going to give you a couple examples of companies that we use every day that take advantage of these strategies. So what a cash value life insurance policy is, it has two parts to it. Part of it does have your cost of insurance. So we talk about, hey, your death benefit, instead of it being, not guaranteed on the term side, you have a guaranteed death benefit. Meaning if you said today, I'm going to go get a $250,000 permanent policy, that $250,000 is going to get paid out to your beneficiary or as a living benefit. Let me touch on that because this is key before I even get into the cash value part. Like you just said, man, a lot of people only think of insurance as a death benefit. Insurance companies were like, man, how can we truly help people? So what they did is they created something called a living benefit. And inside of certain policies, if you can't perform 2 out of the 6 activities of daily living, your insurance policy will actually accelerate that death benefit, in this case, $250,000, and they'll give you a portion of it while you're alive. They'll give it to you while you're alive. Okay.
That's facts.
True story. Like one of my mentors, one of my coaches, his uncle actually got diagnosed with cancer of the esophagus. Picture this. When he's telling me this story, I wasn't in the industry. I was just like, I was a client at that point.
Right.
I just told you my background. Listen to this background and tell you how close it was to me. He's his single family income. So he worked, his wife stayed at home. He had 2 young kids. He had been in the tech industry 14 years out in California. But in this case, he got diagnosed with cancer of the esophagus. And his job said, if you can no longer come to work, we're going to have to let you go. So they lay him off as he's going through his diagnosis. And now, again, most people don't realize when you lose your job, you don't only lose your health benefits, your dental, you also lose your life insurance policy. Your life insurance policy will not follow you after you leave that job. Too many of my clients will say, oh, I'm good. I have a life insurance policy through my job. When you leave that job, that policy will not go with you. So now you're older and now you're trying to figure out, oh, I need a policy at 50, 60 years old on a fixed income. It's the craziest thing ever. So he gets diagnosed. I'll fast forward. He gets diagnosed. But thank God somebody actually insured him. They showed him a policy with living benefits 10 years prior. Okay. And in those 10 years, he paid out $15,000 into the policy. When he got diagnosed, they cut him a check for $1.8 million. And he's alive.
Good. That's good.
And he's alive. He was able to beat cancer and stuff like that for 3 years, take care of his family, get the best treatment out in California. So this is the power of living benefits. So how many people do we know that have gone through cancer, stroke, diabetes, severe, heart attacks, conditions that will either one, stop them from working, or it makes it very difficult to go through life. Now you have a part of a policy that will be able to help you while you're alive. Help you while you're alive. So that it's huge, man. That part of what we do is huge. This is how living benefits are actually the reason I'm in this industry, because had someone educated my 2 uncles on living benefits, one of them got diagnosed with multiple sclerosis. The other one had a stroke. And both need, they need assistance. They both need full-time assistance. If someone had educated both of them on the policy with living benefits, my mom wouldn't have had to go through work 3 jobs and take care of both of her brothers while raising me and my brother.
Man, this is facts, man. So a lot of people don't understand that because life insurance, they got all the money. They do. This is the real deal, man. So when living benefits can help you, people need to understand that you need to take advantage of that. Set yourself up for success. On the last time,
and I'll also say living benefits, they're not all created equal.
Okay.
So some companies will say, oh, I got living benefits. They'll say, oh, I got terminal illness. There's actually 4 parts to living benefits. There's very few companies that will offer you all 4 living benefits. So in that case where the gentleman got diagnosed with cancer, that policy actually did something for him. What the most basic one that like the common insurance company has is what they call terminal illness. Basically, it just means if a doctor says you have 6, 12, or 18 months left of living, that's the only way that insurance policy is going to help.
That's what kicks in. Okay.
Yep, that's the only way it's going to help you. What I'm talking about is obviously, you have a medical condition, life expectancy, things like that. Now the policy helps you while you're alive.
Thank you for breaking that down, man. Now, we did the whole, term versus whole permanent. I'm getting there.
So yeah,
I want to bust down one of my favorite
cash
policies. Value? Yeah, cash value. We could do that. Let's do that. And then I want to transition into my favorite type of policy, which is the IUL. And
got it.
I love that one for the fact that it marries both the stock market and life insurance. And it's a policy that allows people to take advantage of the market, even if they're, risk averse. And it allows you to have a vehicle to do that, to minimize your exposure. So I want you to go ahead and break down, the cash value part that we were just talking about, and then, IUL.
Got it. Absolutely. So the IUL is just a type of permanent policy. So the IUL does have the guaranteed death benefit. It does have the living benefit. And then I'm going to cover, the cash value part of it. So nowadays, a lot of people, when you talk about, hey, I need to save money, where's one place they typically say, hey, I'm going to save money? Where do they typically put it?
The worst place in the world, a savings account.
They put it in a savings account. You're absolutely right. The average savings account is about 0.03%.
Right.
0.03%. So I'm going to use a couple of the big banks, Chase, Bank of America, for example. If someone says, hey, I want to save money into that account, I always want to know, we talk about RRI because we're talking about stocks and investing and stuff like that. I'm like, man, how quick am I going to make my money back? How quick can my money grow for me? Okay. So what a lot of people don't realize is the rule of 72 is created by Albert Einstein. If you take the number 72, it's the simplest math problem. You can apply it to everything every day in any situation. Take the number 72 divided by the interest rate somebody's willing to give you. It'll tell you how long it takes your money to double.
Right.
So in a savings account, 72 divided by 0.03, 2,400 years. It would take you to go from $1 to $2. $1 to $2. So what, people started like, oh yeah, like you said, people started putting money in different places, and then insurance companies came up with an index account. What an index account is, and this is explaining what the IUL, the portion of the IUL, the index account it's a hybrid account. So now you gain the safety of the bank of not being able to lose money when the market crashes, but you also, like you said, gain a portion of the upsides when the market is actually going up. When the market is doing well, you gain a portion of the upside. So like you said, for those that are risk averse, they're like, man, I want to put my money somewhere, but I don't want to lose it. These index accounts are, an excellent opportunity. So now you're putting your money in here. When the market is going up, you're gaining as well. They average 0 to 12%, but now you can't lose money. Right. So when we talk about the IUL, it uses that same type of account. So now when you're paying into your policy, your money is going into 2 buckets. Your first bucket is going to be your guaranteed death benefit. So this is covering your cost of insurance.
Right.
Okay. But now the other portion of that money is going into a savings account inside of your insurance policy that's growing anywhere between 0 and 12%. 0 and 12%. But here's the kicker. A lot of people talk about Roth accounts, Roth IRAs. What's the biggest thing people like about Roth IRAs?
Roth IRA gives you a tax advantage.
There you go. Now, what if I tell you could take that same tax advantage, put it inside of your insurance policy? Now the growth on that money is also tax-free. The growth on that money is tax-free. So this is how, so I think everybody heard of the golden arches. McDonald's. So
Right.
when McDonald's was actually getting started, they couldn't get a loan from anywhere. Like they're building the very first McDonald's. They couldn't pay their employees. But when someone says, hey, don't you have one of those cash value thingies? You got one of those cash value thingies. Like, yeah, I got one of those. So what did he do? He went into his policy. That's how he paid his employees when they first got started. Now, imagine if he didn't have that policy. Imagine every McDonald's on every corner wouldn't exist.
It would took a little bit longer. He would have found some way, but
He would have found it. He would have found a way. But yeah, it's things like that. It's like, man, I can put my money into a place that mirrors the market. Now I can also grow my money. Obviously, you want 0 to 12%, or do you want 0.03%? But now I can put my money into a place and grow. So this is huge when it comes to, I talked about 529s. I talked about Gerber plans. I talk about savings account. Imagine just redirecting all of that money into this account that you're already going to have anyway.
Right.
You set your kids up.
And so, to add on to that, one thing that I do and that I've exercised too is I put life insurance policies on my kids at 15 days old, because that's the earliest you can do it. And for anybody who didn't catch that on the podcast before, you got it now. 15 days old is the very first time that you can put your children in. And that's going to obviously be the rock bottom of prices that you can get
There you go.
for your child. And it can be as small as $5 a month. You can set up a policy for your child to succeed.
You want to know what's crazy is if we thought about those things as like I've worked with a lot of different clients. The clients that I've had that said, man, I'm so thankful my parents thought about me when I was born and made sure my legacy was protected before I even knew it. I didn't even know what the letter L was. Yeah, they didn't even know what the letter L was in legacy. So being able as a father, as a husband now, I'm like, okay, boom, making sure that if I got it, in my 30s, my kids are, they're less, all of them are less than 5. So now they all have the same policies I have. And I'm like, wow, look at the price difference. But now that policy they're locked in for the rest of their life, man.
Right.
They're locked in for the rest of their life. So if you're a parent out there and you're like, man, I really want to make sure I extend the legacy of my last name, do right by your kids. Think about your kids, sacrifice a couple Starbucks a month and make sure your kids have policies. Amen. It's the easiest way to create generational wealth, but now you're also leveraging that account. So now when they need to go to school, get their first car, like all that money that's growing in your cash value, tax-free, you can actually do what you can leverage against it. So you can borrow that money tax-free.
Right.
And now be able to take care of those things and not have to worry about taking out loans and all kinds of student loans and going into more debt.
Be your own bank. That's
your own bank.
That's what I tell people. Yeah.
B.O.B.
Right. So I got a couple more questions here, and then I can get you on your way, brother. So,
no, we're good.
Yep. Real simple explanation. A lot of people struggle with how much coverage they should have, right? So break down for the people, what type of coverage a typical working person should have. Easy math for what you should have for coverage.
Got it. Very, very simple, guys. A lot of people will just say, hey, I want this amount of coverage. As a professional in this industry, I don't let my clients tell me how much coverage they need because typically they're either overinsured or they're way underinsured. Mm-hmm. So I use a method called DIME. It stands for debt, income, mortgage, and then education. This is the formulas that you're going to use to figure out, hey, this is how much insurance I'm going to need. The D stands for debt. Calculate all your student loans, personal loans, things like that. Calculate all of your debt. Then write the letter D on your paper and then write the total. Let's say in this case, we're going to say it's 25 grand. Okay. With your income, very simple. Take your yearly income, multiply it by 10. What's an income for this person? What would you say this person makes?
Go ahead and say they make 60,000. We'll just do that.
60,000. All right.
Yeah.
So this person makes 60,000. If we multiply that by 10, that's 600,000. Okay. The next line is mortgage. What would you say? Let's say this person owns their home. what would you say they have? What would you say the balance in their mortgage would be?
If you make $60,000, your house needs to be maximum $120,000. If you ask me, but
There you go. No, I love it. I love it. You shouldn't overextend yourself.
right. If you want to talk about the debt, we'll just say they put down the typical 20% down on 120, so that's 24,000. We'll go ahead and knock that down to 96,000.
96K. Perfect. So they got 96K left in their home. Okay. And then last, this is obviously a middle class family. What would you say? How many kids would they have under the age of 18?
We'll say two.
Two kids under the age of 18. And would you want them to be able to go to college?
Absolutely. Yeah. Say that money.
Okay, cool. So what we do with each kid is we multiply. I mean, we add 100,000 per kid. So God forbid something happens to that parent, the kids they come into 100,000 each to either one of two things. Some people are like, I don't want my kids to go to college. So either now they could go and have, don't have the student loans, or now they have $100,000 to go start a business and become an entrepreneur. Okay. So 200,000. So what all I'm going to do is simple math, man. I'm going to take all those numbers and I'm going to add them together. So in this case, we're going to start with the biggest number. So you got 600,
right?
You got 600. That's your income. Then we're going to add the 96 for your mortgage, plus the 200,000 for the education, plus the 25,000 in debt. This person's insurable need is 921,000. 921,000. So they're knocking on the door of $1 million.
All right. That's simple math right there.
It's a very simple math. Some people would be like, oh, the flip side to that is someone would say, hey, I want $2 million. Like your insurable need is 920, but now you want 2 million. The chances of that person being able to sustain that policy long-term is it starts to go down based on their income.
Right.
Yep. So
that's
simple math on how to calculate your insurable need.
All right. That's debt, income. The M was mortgage, and E was education.
Education.
Simple.
Yep.
Simple. All right. So as you've grown in this life insurance industry, what is something that you learned about life insurance that you never knew about life insurance?
Oh man. To be honest, all of it, all of it. Like I told you, being in the industry of tech for 14 years and not ever learning about, I'm not even going to talk about insurance. So like learning anything about money. Like, I didn't know the first thing about stocks. I didn't know the first thing about credit, business credit. When I talk about it, didn't know anything about money. It's just like, hey, create a spreadsheet, expenses, income, expenses, what's left. That was my extent of my financial education. So everything in the insurance space is new to me. So I just realized two things. One, it's a very noble industry, and being able to truly help people. If people could get past the, hey, insurance, don't put these bad vibes on me because I don't even want to talk about that aspect of it. Because what happens is people really, they take that and they continue that on for, their whole life. And then now they're also teaching their kids that same type of mindset. So now that family doesn't get insured. And then the kids also grow up thinking, man, my mom didn't have it, so I guess I shouldn't have it either. Because you got to remember, and I give people this analogy. These things called a phone, they come out and they update every 2 to 3 years. That you get a new phone, you get new software, they're pushing out updates. Insurance does the exact same thing. The whole concept of cash value and stuff like that, it's not a 300-year-old part of life insurance. It's like maybe less than 100 years old. Living benefits it's like 20-30 years old. So these products and things are also evolving with what's going on in the world. So being able to truly shift the mindset of your family and say, hey, we can talk about these things. That way my kids can also learn, hey, these things are important. This is my philosophy. My insurance policies, they get paid before my rent, before my mortgage, before my car, before my phone. My insurance policies get paid first.
Yeah.
It's the single most thing that's the only way that you're going to guarantee that generational wealth happens. We all want to go make $1 million. We all want to go run successful businesses, but how can I guarantee generational wealth today? There's no other way to guarantee it.
You gotta have that discipline, man. You gotta make sure you pay yourself first every single time. When you get that paycheck, you gotta immediately put that money to the side for something that you know you need. Period. Yep. Life insurance is definitely one of those things. Last question I got for you. So, what do you know about trust funds? Is that something that you can talk about?
I would say I'm not a professional at it, but what I will say, though, there's plenty of people that will run laps around me in that area. So it's not something that I can speak intelligently on. But what I do know, based on talking with a lot of people that create trust for families and things like that, most people don't realize your trust can actually own your life insurance policy.
Right.
Your trust can be the beneficiary of your life insurance policy. So God forbid something happens, whatever instructions, whatever you designated inside of your trust, that's how that money and things are going to be allocated to the family. So instead of waiting and just saying, hey, Sally is going to be the beneficiary. She's going to go get $250,000, $500,000. And we pray that she's going to take care of our kids. If something were to happen to both of us, I can set this up in my trust, and my trust can control how that money is distributed for those kids.
This is exactly what I wanted to get into when it comes to the trust fund, because we've all heard the term of trust fund babies and all that type of stuff. And when I heard it before, I didn't really know what it meant. And then
me either, man.
When I started understanding it, I associated it with just rich folks, period. And it was just unattainable. Yep. So when I started understanding it, I'm like, wait a minute, that's not discriminatory to anybody. Anybody can have this. Anybody can set up a trust fund. And what Greg was saying is it's simply changing the beneficiary from somebody to something. So it's now an entity. And this is how generational wealth really gets passed down. I got all of my kids an insurance policy, myself and my wife. All right. On all those policies, we have a trust fund set up. That trust fund is the beneficiary. That way, something happens to any of us, or the day comes when all of us are gone and all of our children have something, that trust is set up for them right then and there. That next generation automatically has everything at their access. Then you educate your children to tell them to do the same exact thing, get policies on them, and you continue to feed that trust for all of the money that happens to something that's going to happen to you anyway. Yep. So you might as well set it up so that way your family and your family's family and your family's family's family, everybody's set up for life. So
no, you're spot on with that. Cause I had one client, she was like the matriarch of her family. Like everything that happened in the family went through her. Like generational. This is why I tell people generational wealth is generational. So the people that have money, they have the information and stuff like that, they're going to continue to build those things. Generational poverty is also generational. Correct. So if you're not getting the information, you're not getting the tools, the knowledge, the strategies, there's nothing that's going to be passed on to your kids. But it only takes one person. That's it. Most people think my whole family has to do it. I need everybody on my team and everybody in the family to do it with me. It takes one person in one family to break that curse. The reason why I say this is I had one client, and I remember her to this day. She was like, hey, I understand. I want to understand this. I want to learn about it. And I want to put some policies in place for myself. Mind you, when she heard about this and what creating generational wealth and how people could kill the 529s, the Gerber life plans, how to make sure their babies have access to $1 million in cash. She was like, every grandchild that she had, she put a policy on in 2 minutes. Every one of them, like all of her kids got policies, but also all of her grandkids got policies. So she was talking about like generational wealth is going to happen because I made a decision.
Right.
So now anything that happens, she's like, okay, boom, at least I know all of my kids are set up. All of my grandchildren's kids up. If it's up to her and God gives her health, she's going to make sure her great grandkids also have policies as well. So that's why I say it only takes one person to change the mindset of, man, hey, I need to go create generational wealth for my family. And she's like, I'm not even worried about the parents paying for it. I'm paying for all of it.
It's dirt cheap at that point too.
Man, tell me about it. And it's money that you're going to save anyway. So you might as well redirect it. It's just like we do in 401, like, typical people that work at like a 401k, they have a job. Like, hey, my company's going to match me this money. My company's going to put this, they're going to put that. If your company's going to match you 3% and you're going to put in 8%, everything over that 3% is open to the market.
Right.
So when the market crashes, you lose money as well. You lose money as well. Like it chokes me up because I'm like, damn, nobody taught us this stuff. Yeah. You get a job and HR just says, sign here, sign here, sign here. And when you ask a question, they have no idea. But I show people how to take that same money, redirect it into an IUL or permanent policy. And I get nothing but thank yous.
Yeah. This is why we vibed immediately, because we understood the need for telling people this type of information, because you didn't know it. I certainly didn't know it. And everything that I know now about the stock market, life insurance, real estate, this is all stuff that I learned just from going through and talking with different people, reading books and getting the information and soaking it up, because I knew I had to make that change, man. I knew it. And from my background, from where I'm from, people I knew, friends I knew, there was no way I was going to get access to this unless I really stepped outside of that boundary and took that risk, man. So I appreciate you. Man. Appreciate you coming on the show. And you're welcome anytime, man. Last question I got for you is, what is the biggest tip that you can give somebody right now in order to help them start that generational wealth?
It's easy, man. With the times that we're in, where, in the last 24 months, the U.S. has been printing its own dollar for the last 100 or so years. In those years, in that short amount of time, 30% of every dollar ever printed was printed in the last 24 months. People catch this. I'm going to say it again. Every dollar that was ever printed in the last 100-something years has been printed in the last 24 months due to the economy, the pandemic, things of that nature. So now the way the way that happened is, we got stimulus checks. People printed out money. They printed billions and trillions of dollars. And people were happy when that happened. They're like, oh, cool. Not happy in a sense but they're like, oh, cool. I'm getting this check. I don't have to work for it, things of that nature. But now it's coming back full circle, where inflation is 7.98%. Gas prices in California are almost $9 a gallon. Like milk is up, eggs are up, bread is up. So if you got family, you're feeling the heat of what's happening in the economy right now. I only have one advice for people: go control your route. The name of my brand is not an accident. I tell people, regardless of what you plan on doing in life, you got to be able to control what you do. If you wait for somebody to say, hey, this is how much you get paid per hour, you're going to fall a victim to the system for the rest of your life. Look at all the people who are like, man, I'm going to go work for this job for 30 years. The pandemic wiped them out. They're like, okay, boom, your job is gone. But now if you were able to control your route and say, hey, man, I need to go control my financial situation, go become an entrepreneur, I'm not going to tell you what to do, but I chose an industry that was conducive to helping the most amount of people as possible, but also making the most amount of money as possible as well, and doing it in a way where I know I can impact and affect people and help them, control their route, man. So I would say my biggest tip for them, man, is control your income. Control your income. Don't wait for somebody to say, hey, this is how much you're worth, because I fully believe God has given you a gift. He's given you talents and abilities. And to say that, hey, I'm only worth $20-30 an hour is like a slap in the face, because I believe he created us to do more and to be more and impact more people. I'm a huge proponent of, just being out there just to be able to control your income and hit financial freedom.
Thank you. And welcome to the Empower Empire. Thank you for coming on. I appreciate you being in my life, man. I really do. Thank you for taking the time out. So that's it for this episode of Stocks and Bars. Tell everybody where they can reach you at.
Awesome, man. Thank you again for at least having me on the podcast. I'll gladly interact and be a guest again. You guys can catch me on IG. It's I am Greg Skeene. So I am GREG SKEENE. So I am Greg Skeene. You can visit my brand is Control Your Route, controlyourroute.com. There you can talk, look at what I do, and get more information about, everything that I do, man.
All right. Thank you for the knowledge. I want you to enjoy the rest of your night with your family, and we'll catch you later, brother.
Blessings, man. Thank you.
Thank you.
And you know what time it is. It's Stocks and Bars. Let me borrow this real quick, Benny. I got this. Yo, we need to put an emphasis on insuring our life. We don't think twice about a car or insuring a bike or a house or anything that we bought in our life. There ain't an item that was made more important than life. That's why everything I say when I talk on the mic, a strong emphasis is made for us caught in the fight. Every lyric written was pain from a part of my life. From financial death I could save others with smarter advice. We used to think there was only one way to grow money. Work hard and put it in banks and let it hold money. I unlearn and relearn. Now that I did, it's so funny. I'm no dummy to grow my wealth. Now I got myself my life insurance and a trust fund, and got money in the market. Got a living will in place for when my sunny days get darker. Teach my culture everything I know. A new wave is now starting. Flex our power with our finances. No need for us for marching. Stocks and bars, stocks and bars, stocks and bars, stocks.